Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. November 11th, today is in fact Veterans Day, so thanks to all who served and are currently serving. Yesterday we preluded Veterans Day, and here we are today. How are you, Dan?
I'm good. I jumped the gun a little bit.
No, it's all good.
Now
I'm excited.
I was excited. Now I'm looking at my FactSet machine, and it's confirmed the bond market is closed.
Yes.
Today. But remind the listener, the viewer, why everyone should know that.
Well, it's an easy one. There are hard ones to remember.
This is not one.
Like Arbor Day. And they're easy ones to remember because on the 11th day of the 11th month, at the 11th hour of that day, that was Armistice Day, I believe, right after World War I. I can't say the exact year, but that turned into a Veterans Day. So there you go. And I think since then, obviously, I mean, celebrating is, I don't know if that's the right word, but I think acknowledging is a better word. All those, again, that served and are currently serving, your dad being one of them, by the way.
Yes. He was in the Army. He served. He was active in the mid to late 60s, and then he stayed in the reserves, I want to say, into the mid 80s, and was a defining part of his life, by the way. And, you know, it's interesting. He and some of his best friends, he was at Syracuse University from 1961 to 65. They were all ROTC, you know, and it really is amazing to think about that program. And, you know, you got out of school and then you went and you served and, you know, they helped pay for college and all that sort of stuff. So, yes, definitely acknowledging the veterans guy. Here's one thing as we look at the market today. Hard turn, as they say in the biz.
It was a hard turn.
The trading gods giveth, and the trading gods taketh away.
They often do.
Properly, because this has been, in the last week, it's been a bit of a yo-yo. Maybe Amanda can pull up the S&P 500 or the NASDAQ, and we can look at the futures here, because the futures, I think, is helpful because we get the overnight sessions also, Guy. And you just see the back and forth. Now, oftentimes, look at this, you will, and let's do a 10-day or something like that. You know, you'll see the widening of volatility bands as something, you know, and you can just see those left little ticks are the opening and the right ticks are the close, and you just see a lot of intraday movement. And, you know, we've mentioned this all with the VIX that's below 20. I think we got above 20 briefly. I think the Friday action really felt, and you could go see that just 2 days prior, really felt, Guy, like this was going to be something, right? The VIX was maybe going to work its way into the mid 20s. And then you had, you know, I guess rumors of, you know, some sort of deal in the government. I just didn't think a lot was baked in because of the government shutdown, you know, to the downside. So it kind of surprised me that you had that sort of 2-day move off the lows. And just one other thing, Guy, this chart formation, and we talk about it a lot on Friday, was a textbook spike bottom, right? So you see that opening was kind of flat-ish from the prior day. You have that huge range to the downside. You get back, you almost close at the opening, and then the next day you gap up like that. So that is a pretty powerful formation in a very near term.
No doubt about it. And, you know, again, Friday's action was worth watching. Clearly somebody knew something. And your point about, you didn't think that the shutdown was baked in, nor did I. But as we talked about yesterday, you know, maybe the market was saying we would have been significantly higher if we did not have said shutdown. By the way, I don't want to bury the lead. There's, in horse racing, there's a term called a late entry. Well, we have a late entry today. That comes into form, by the way, of John Butters, who's dropping his work with us today, Tuesday, which is remarkable. I'm very excited.
Butters is all over it. And you know, this is the time where he can take a step back, Guy. He can do a little bit of a post-mortem on the Q3 earnings season. You know, he writes the earnings insight blog over there at FactSet, you know, and he is also the senior earnings analyst over there. You know, I nailed that one right there. So if you want the blog in your email box on Friday mornings, you know where to go, people. You just go to Jacob. You just go, oh, there it is, factset.com/insight/subscribe, and we get a preview of this each week before it is in your email box, Guy.
We're getting some early questions, and this is coming from Sally. And I love the name. Can't do it, Sally. Can you get me off the hook, Tom, for old time's sake? Can't do it, Sally. Of
Yeah,
course.
but that's a different Sally. That's Sal.
That's
Okay,
Sal.
that's
Yeah, right.
Sal. I think
That's Sal
Sally is a
Tessio.
woman. What's the name of this guy who sings that song, Sally? It's a super freaking annoying song, and he was on Saturday Night Live a couple weeks ago.
I do not know this.
He's like a hip cowboy, and it's like, "Hey, Sally," or some crap like that.
A
It's
hip cowboy.
this you would find this song nauseating.
I have no doubt.
Okay, so let's get back to
the hip cowboy stuff. So Sally's asking about Dollar General. So let's throw up a chart. And I think what he's looking at is the fact that in October, we traded down to about 96 or so. And then I think it was either yesterday or a few days ago, we traded back down to 96. And here we are at 102. So, I'm looking at this and, maybe there's a short-term bit of a double bottom here. Of course, the problem is I had thought Dollar Gen was sort of going from sort of this bearish to bullish reversal, and it sort of ran out of steam. So the dollar stores have disappointed. And, one of the things we've said for a while is if people are trading down from the dollar stores, where does that sort of leave us? But I will tell you, I look at those little 95.5, 96 levels, and maybe it gives you something to trade against here, Sally.
There you go.
I don't know what FLG is, so I apologize.
Yeah, interesting.
Or maybe
Let's
it's big. I don't know.
let's do some work. Listen, we're gonna hit CoreWeave. We're gonna hit the whole AI thingy-majiggy here. Just there's lots of stuff to talk about here. But Guy, every morning I go to my FactSet machine. I have I have lists of stocks by sector, by subsector, that sort of thing. I flip through the charts just to kind of get a sense of where things are trading, where they were, that sort of thing. Look at this Novo Nordisk, NVO. That's how it comes out. And, it's had a number of gaps. It's a disaster, like 4 consecutives on earnings, or maybe 3 as I'm looking at it. You got to go back to December, then you got to go to March, and then you can go to late July. And look at this thing. I mean, this is like throw a 200-day in there. This is a perfect double bottom.
I agree with that. I saw that this morning as well. And we've been talking about this on Fast Money. We talk about it here. And, full disclosure, this is a name for the majority of probably this year. I've been trying to find a bottom, and it's been an unsuccessful efforts to trying to pick a bottom in NVO. But if you go longer term, you'll see that double bottom from, I guess, early August. But you're also down to levels that we saw probably in 2022 or so. So this gives you something, I think, to sort of trade against. And Novo, it's still in the game, clearly, in terms of GLP-1s. Obviously, not to the extent that Eli Lilly is, but it also trades at a significant discount in terms of valuation. So Eli Lilly's getting all the love, but Novo might be a trading opportunity here right before our eyes on the long side.
Well, I love what you did backing that out, because you look at that sort of mid 23 sort of level there, Guy, before it took off, and that's it. I mean, you could bring this chart all the way out there, draw a nice little support line, not just that double bottom, but I think if you look at this thing and where it is, I mean, you could really set a stop, if you will, right below that sort of level if you're looking to play it. And if you look where the 200-day moving average is getting to, it's going to be, gap fill-ish territory. So that one's kind of interesting to me. Here was another chart that caught my eye, Guy, and Nike. And Nike doesn't report until mid-December. I think it's like 18th, 19th or something like that. Go to a 1 year for a second, and and then we'll go back to the 5 year. So look at this, it filled in that gap, Guy, from the summer, and I guess it was late June. And it sliced through that 200-day just recently. And you've seen it pick its head up. There's an article in the Wall Street Journal today. Nike focuses on speed to make a comeback. So this one could be interesting. $60 stop, or maybe use options to kind of define your risk.
Go long-term chart. Go back to November of 2021, when I believe that's when Nike made its all-time high, and you can draw a downtrend from that high, and you'll see. You can see the first point. Obviously, then you can see the second point comes in like the summer of 23 or something like that. And then we're there. You look at that. See, wow. I mean, my eyes are still very good at my advanced age. So, you get this thing on its horse, and you get a close above 75, which, by the way, is light frickin' years away. But, that's going to be your downtrend line that potentially could be broken to the upside. So you got to, you can play this one of two ways. You can sort of play it from the long side here and get out at 75 on the trend line, or you can get on the long side here and then sort of buy the double if we were to break the downtrend line. That's obviously the aggressive way to do it, but that's two ways to trade Nike here, I think.
Yeah, and I think when you look at it on a 5-year, you could say to yourself, yeah, this looks really heavy. It looks like it's going back towards that $52 level or whatever. Let's go back to the 1 year for a second. I'm just looking at this as a potential for a gap fill, back to that prior earnings announcement. The other thing I'll say, and maybe this is pikerish, maybe some of you guys want to do a little chat GPTing and
Pikerish?
like a piker, so in February, we're gonna have the Olympics. And then in the summer, we're going to
say something that's going to offend a lot of people. I am exhausted. The Olympics exhaust me. Back to you.
The last Olympics, guy, when I tell you, I did not watch a single minute of the Olympics. I just don't find them particularly interesting. I'll watch a little of the skiing, a little hockey. I cannot stand figure skating. I mean, I just think it's one of the most nauseating sort of things. But, and then we have the World Cup in the summer.
Oh, I love the World Cup, the soccer.
Okay. So, those sorts of things. I mean, I think they usually kind of, act, the Nike trades pretty strongly into those sorts of events.
Nike does as well. I hate people.
I think Nike's interesting here. Okay.
I do too. Yes, I agree.
I'm just saying. Okay.
By the way, going back, and we have a question I want to address, but, in this whole sort of, obviously, Pfizer, there was some M&A activity around this Metsera, and that got rectified. Now, I've said it last night, and I'll say it again on this show. There are a bunch of names out there in the biotech world that I think are going to be acquired at some point early next year. And one of them is this GPCR, Summit Therapeutics, which we've talked about for a while. So if you want to throw a chart up, Amanda, you could see that recently this sucker's been getting on its horse as well. So there are definitely some downstream plays in the biotech space that I think are starting to show some signs of life here. And I do think there's going to be a lot of M&A activity in 2026 in biotech, as a lot of these, legacy big cap pharma names need to sort of move the needle. So keep your eyes on some of these names as well, Dan.
All right, here's a question, guy. This gets us into the kind of AI and the core weave. So this is from Gregory C. He says, hey, can Dan clarify his final trade from last night on CNBC on Fast Money? I wasn't sure if it was to buy Microsoft or sell CoreWeave and the thinking behind it. Okay, so I think regular viewers of Fast Money and listeners of this show or viewers know that I can't stand the final trade. I think it's just one of the dumbest mechanisms of the entire show. It's been here since guys started, I think, going back to 2006 for the program. If we make it to January, guy, it'll be 19 years of the official program. You started doing it as a segment in 06. But it's just like, and it's actually, guy, on the web, it's one of the most viewed segments on Fast Money. It's also a segment that is always basically under 1 minute. And there's 4 panelists. And we get to say one thing about one stock. Okay. So last night, CoreWeave was down a few percent after its earnings and its call. And my final call, it said CRWV, or is that right? CoreWeave. But I just said I wouldn't be buying CoreWeave here if Microsoft's CEO is saying that they are power constrained and the core and he's got chips lying around, these GPUs, and CoreWeave is saying that they can't get as many chips as they want, but they have enough power. Who are you going to believe? So I wasn't saying about Microsoft either. It's just that was my final comment. I don't like to call it a final call, guy.
There you go. You've taken a stand on this, and I respect that. I mean, what am I going to say? That is legacy Fast Money stuff. Anyway, in terms of CoreWeave, real quick, think about the backlog that grew, and I think what we said last night, if the stocks can't rally on that, I mean, that's somewhat problematic. Here we are sort of at $90. This is the level that we traded down to in September, early September, if you're looking for tradable level. But you break 90, and I think we're going to be having a much different conversation. And again, I don't want to make too big a deal out of CoreWeave and the importance of it in the whole AI trade, but obviously this is one that is not keeping up with its not peers, but other members of the space.
Well, here's why I think it's important. I think it's important because these guys are like, how in the markets guy, you have those layoff accounts, right? So the idea is like you get a big order in something. It could be stocks, it could be options, that sort of thing. You're a market maker or you're a trader at a big bank or something like that, and you don't want to take down the entire other side of a trade. You go to someone that's called a layoff account. They're like a middleman, right? That sort of thing. And so these guys are like the layoff account of the AI data center business, right? And so we know that Microsoft coming into their IPO in March was 70% of their revenue. Now it's diversified. You just talked about that backlog. They've gotten orders from Meta, from OpenAI. They also have a commitment from NVIDIA, which was an early investor, that they will sop up excess capacity. Well, let's see how long that lasts. You know what I mean? And so one of the reasons why investors are disappointed here is that they saw a push out of one of their deals. They're talking about infrastructure. They're talking about their ability to build data centers is constrained because of labor and competition for this, that, the other thing. And the power thing is really interesting because the only way all of these hyperscalers and these neo clouds, which is what CoreWeave is, can fulfill those backlog obligations is by nuclear reactors being built. And it's not just one or two being reopened. It's like a dozen that needs to fill that. So, those things take years. Those things are going to be increasingly expensive to build, right? And so my only point about this company, I'm sure the management guy, I'm sure they're perfectly nice people, okay, as you like to say.
Yeah.
But I think they're in over their skis about what they can, kind of build out. And let's just take it to Oracle for a second, because Oracle, everyone's all geeked up about their ability to build out 4.5 gigawatts for OpenAI and some of these other customers. But look at this thing. It's filled in that entire gap. It's going to that 200-day moving average. And you tell me when they report in December, if they have a guidance and a commentary similar to that of CoreWeave, where's that stock going, guy?
Yeah, it's funny. Yesterday we talked about, I brought it up. You did not agree, and you were right not to agree. But I thought Oracle might have filled the gap and was set up for a bounce. And obviously, you look at it today, and that's not the case. So the fact that we filled the gap and are not bouncing suggests exactly what you just said. And I will say this: when we had that huge spike to 350 or thereabouts in September, we both sort of looked at each other and said, this makes 0 sense whatsoever. And we thought it would be a pretty quick round trip, and it happened. Now, you did get a retest or another bit of a spike on the upside in early October, but that was clearly short-lived. So, the bloom is off the rose here as well. Microsoft is another name that sold off, but is seemingly finding some footing. But, some of these adjacency names are, you have to start to wonder, what's going on below the surface.
Yeah, Microsoft has barely seen an uptick since that gap higher. And we saw that again after their last quarter. I mean, that really feels like it's got a date with its 200-day moving average. What is that, 465? And then let's just pull up Meta for a second again. The thing about Meta, and this is really important when you think, I think that they said they're going to spend $500 billion over the next few years to build out data centers and compute. Well, here's the problem. They are not Google Cloud. They are not Amazon AWS. They are not Microsoft Azure. They don't have ability for folks to rent their compute. They're not building out this footprint for other customers. They're building it out for their own use and their own, pursuit of AGI and super intelligence. So this is one that I think investors have in the penalty box. And you could say, well, valuation's always been, it feels like a value trap to me. And the last thing I'll just say on this guy, AMD, let's pull this up here, because AMD had a gap similar to Oracle because of this massive order they got from OpenAI. I see no reason why this stock should not do exactly what Oracle did over the next 6 months. I really don't, because
I agree with that as well.
The whole idea is that they are going to have a competitive chip to NVIDIA, and they're going to get all this second source sort of act. Good luck with that.
And if you want to level, I mean, go farther out, and you can see the prior all-time high was, I think, in March of 2024. I think that's right. I guess what I'm saying is that 20, where was that, 207 or something, 210. That's where it should trade back down to, and then we'll have a conversation, whatever that spike there is, and then the inevitable gap fill comes in if and when we break through that prior resistance level. So I agree with you on that too.
Yeah. So when the stock, let's go back just really quickly. We'll toggle. When Oracle was 313, you mentioned that it had that kind of, bounce into, let's just go to 1 year really quickly. And you see that it sold off, and then it had that nice little rally back to, what is that, 325 or something. When the stock was 313, we put on a 300, 250, 200 put butterfly. And basically what we were doing is targeting, that was in November, we were targeting a move back to 250. But the trade made money between, I think we paid like 10, 11 bucks for it, between 290 and all the way down to 210. And you're, what you wanted to do is have this thing go back to 250, which is what it did. And now it's obviously sold off since there. Let's go back to AMD for a second, Guy, because I think there's some nice round levels there too. And maybe we'll talk to, we have Mike Obachina and Steph Guild on the program tomorrow from Robinhood. They're actually going to be here in studio.
IRL, they call that, right?
Yeah. So I think you could look at, a level here, 200 being the one that you'd want to pin it to, depending upon the time. And then you would roll it from the 200 to 150 to 100 and trying to go in what they call the guts of that. So we'll detail that later. And then one last name, Guy, in this whole trade, look at Dell. Look at the move. It's down almost 20% from those recent highs, right? So Dell makes the servers that go into the racks, that go into data centers, right? That train the models. And what's going on here? I mean, like, this telling us something?
I agree with that. And, all the names we just mentioned, by the way, throw NVIDIA up today while you're at it. I mean, that's down today. And I think part of it is SoftBank got out of their stake in NVIDIA. Good for them. They had a great run. So that's one of their better trades, quite frankly. They top tick WeWork back in the day, but I digress. But NVIDIA's having a little rough session as well. And obviously they report. Eric C's asking about SanDisk. That's the flip side of this coin, by the way, or just this memory stuff. And SanDisk, and this question is, will it ever have a down day? And yes, it will. It's just a question of from what level, because this has been just absurd.
I mean, I don't even know what to say. I mean, let me tell you what makes me happy. I hope there's a bunch of our listeners, a bunch of our viewers, when we got that breakout above like 55, and they got in on this thing, because this is generational wealth, Guy. If you bought this thing the first week in September, you know what I mean? Like, but like we realize that there will be a retracement. Put the 200-day moving average out there. You don't see too many stocks on a short-term basis trading this far above its 200. That was a 50, I think, right? And I mean, like, at some point it's going to come back in. But hopefully you guys can be really nimble and take that. I mean, this is one where you probably had very little risk at $50.
By the way, Amanda is commenting. Amanda's great, by the way, for those concerned.
What is she saying?
Amanda said, final call is options action. Final trade is fast money. So Amanda, Johnny on the spot, as she always is.
Yeah, she is. Did you guys get that Sally song? And just when you get it, just play it for Guy. I think might really like it. Just so
doubtful.
I can't stand it, but maybe it's something that
final trade is rage bait for the trolls. That's from Cece.
He's so right, actually. Do you know?
I don't even know what that means.
It means like they just like, oh, dipshit, said to buy Oracle, the other day. Sometimes they literally would be like, they'll be like, we don't have enough time. We have 30 seconds to go around the horn, and Mel has to kind of say, all right, final trade. And then she's got to leave like 7 seconds to say, coming up is Jim Cramer on Mad Money. What happens at 6 p.m. on the dot, on the screws, Guy?
We go right to JC.
They just cut you off.
By the way, Jacob is pointing out that we may get in copyright infringement if we play some dopey song. I mean, it can't be. Listen, if you wanted to play the Zeppelin song, I'd say okay, but we don't need from
Sally.
Role Model. Is that the name of this person? That's
Role Model. That's exactly who it is.
Is that his given name? Like when he was born, his parents looked at him and said,
by the way, I think you can play it because no one's paying us for this. This is free, people. I hope you enjoy this commentary for free. And I think if any of you guys were paying for it, you might think differently. But that's
by the way, Amanda is saying, and Amanda is great. She said, I've never heard of that person before becoming the sexiest man alive. So now I must live under a friggin' rock because I don't know this Role Model person.
I don't know this Role Model. I don't know what he does. I think you do live under a rock, actually.
I mean, I'm not one,
where else do you want to go with this, Guy? We got, so the pharma things are raging right now. Pull up the XLV for a second. Pull up the XLV. You want to go with this? Yeah.
No, I do, because I do. We've pointed this out for a while. Liz Thomas and
Yeah.
I were speaking about this, and we both have thought that pharma's going to get off the mat, and it's happening right before our eyes. And by the way, it's been happening since late summer. And you look at this as the XLV now, obviously driven by one name in particular, but some other names as well. But it's not just that. Pull up a Merck chart. I mean, Merck very quietly is back to $89. Having been floundering for a while. So that's starting to show some signs of life. And, this could be a very short term, again, bearish to bullish reversal if you get a close sort of above 92. So I would continue to watch that. We've obviously mentioned some of these biotech names. Insmed, by the way, if you watch Fast Money, INSM, and I'm not suggesting anybody go racing out and buy this today, but this is a name that we've been on now for quite some time in terms of what they're doing and basically the pipeline that they have. We've had the CEO on now, I think, 4 different times. The first time we had him on, this was a $25 stock, and it recently traded, I think, either side of 200. So keep your eyes open for that. So I agree. Now, what we should also mention, because we've been talking about it, is along with the weakness in tech, once again, Bitcoin not getting much of a bounce. It got up to about 105 and change. It's back down to 103. I will continue to say Bitcoin is a bit of a canary in the coal mine here, Dan.
Yeah, I mean, it just speaks to, one of these risk assets that people piled into. I saw Tom Lee of Fundstrat on CNBC the other day. I saw the clip, and, he's talking to Joe Kernan, who I think is crypto curious guy. I think he's like,
I don't know what that means.
Well, like sometimes he can be a grumpy man. Like he doesn't, like everything that some of the people like here, and, can be a bit skeptical. And so he was talking to Tom, and he said, you still think this thing could, rally and, into
Tom
the end
Lee.
of the year? Yeah. And Tom Lee was like, yeah, I think it can go to 200 or 250. That's 1,000.
Yeah. Listen, a lot of things could happen. I could play tight end for the Giants this week. They have a new.
By the way, that might be a really good upgrade. If you were to play tight end.
There was a time when that's what I wanted to do. There was a time. There's still part of me that would love to be able to do that. But
what do they
I
say about the
understand
Queen? What do they say about the Queen? If she had
the Queen had balls, she'd be the king. The king laughed. He had to. Get it? He had to TWO or TO. The king laughed. He had to.
Yeah.
Anyway, I apologize. This is a futures day of CME, so we might as well throw a gold chart up because there's some different thoughts out there. I still believe that gold might have put in a bit of a short-term bottom. We're getting back on the horse. Obviously, not really participating all that much today. It's sort of flat-ish on the day, but I think gold, again, through the lens of futures or wherever you want to look at it, I think there's another leg higher here. I want to throw up the GDX on my end. You can throw it up on your end as well. Flat on the day as well, but this has recently been bouncing off the recent low we made in early November. So there's a lot to like here, I think, in the gold trade too, Dan.
Yeah, let's go back to the gold futures for a second here, because let's just say you've had a very nice track record with gold over the last, I want to say, year and a half, since it was like at 2,000. Here we are just above 4,000. And what you just said is that you think we made a tradable bottom, right? So if you what would your target be to the upside? Would it be just at those prior all-time highs? Because the way in which they got to those was kind of in quick order, right? And then you saw the volatility bands kind of widen dramatically in those 3 days, right? And so if you thought that your target would be, and the all-time high, which came it was 1017, was 43.58. So your target would be, let's say, 43.60, and maybe you find some resistance there. If you were to buy gold at 41.18, which is where it's trading right now, it's down like down 4. Would you stop this thing just above those lows that we made when we were banging around?
Yeah, that's probably right. I think that's exactly right. Whatever that is, you can pull it up and you can show me. But whatever that sort of low is. So this is a possible scenario. If you go back and sort of look at that spike we had in April of this year. You had the huge move to the upside, had a spike, then we flattened out, traded lower to sideways for the next 5 or 6 months, and then got back on the horse. I think what potentially could happen here is we trade sideways for a period of time, sort of build a bit of a base, work off some of the overbought condition, and then make the next leg higher early next year. And when I say next leg higher, personally, I think we're going to go blowing through that prior all-time high. But, that's the way I would be playing it here. So you could actually, look, you could say, you know what, I'm going to bide my time here. I'm going to wait a little bit, see if it trades sideways for a period of time. But I think, in my opinion, sideways action for the next couple of weeks might be the best case scenario to get the next leg higher in gold.
All right, let's look at the S&P futures here, Guy, because this is one where, we keep talking about this concentration, right, in the NASDAQ, and, it's less concentrated in the S&P 500. But if you look at the SPOOs here, you can draw a little bit of an uptrend. You see the 200-day moving average, which is kind of moving ever so slightly higher. You see those prior highs. You see from those prior highs, a very orderly sort of sell-off that crescendoed into Friday, right? We just talked about that sort of spike bottom. When you look at this here, does this thing have 7,000 all over it? You know what I mean? Because again, you could see this sort of, dispersion between the tech-heavy NASDAQ 100 and then the S&P 500, which is if you get that broadening out sort of trade.
So I want to be crystal clear. I am not changing my view whatsoever. Obviously, all the reasons I've been bearish and continue to be bearish we've talked about them ad nauseum. So they have not gone away. In some cases, they've gotten worse. However, as we're sitting here on Veterans Day, the calendar starts to work in favor of the bulls. And, in the absence of any news, and if NVIDIA doesn't completely shit the bed, as they say, this market's just going to continue to do the levitation just on the back of people chasing. So that's not out of the realm of possibility. I will say, I do think there's going to be a couple more bouts of volatility before the end of the year. I've thought that. I've seen, it looked right for a couple days. It's obviously wrong today. But I think vol is going to come back. So the bulls have been rewarded for basically holding their ground. At some point, though, Dan, valuations, concerns, geopolitical stuff, economic sensitivity, slowdown in the economy, strapped consumer, they're all going to come home to roost.
All right, let's pull up NVIDIA for a second because your point is a good one. Every quarter, it feels like for the last 2.5 years, we've said that NVIDIA could be a huge market mover. And, this one might be, okay? It might be because we've seen from all their customers, we've seen how Meta has acted, we've seen how Microsoft has acted. This despite saying they are spending more, right, on GPUs. Now, you had this consolidation, you had the breakout, it came back fairly quickly. You had the spike bottom on Friday. It's filling in the gap. Last week when we had Obi on the market call on the Legend, we traded a calendar put spread in NVIDIA and we isolated the 190 strike. So we sold the 190 strike in this Friday expiration, and then we bought the next Friday 190 put. Okay, so we're short the 190 put that expires this Friday, and we're long the 190 put that expires next Friday that catches its earnings. And the idea was to basically have the stock close in and around 190, and then that short dated put that we sold expires worthless, and then we end up owning the next week 190 put that captures NVIDIA's earnings. So it seems like we're in good shape right now. We have a few more days, but it's been banging around, got as low as 180, it got as high as 200. And this is one guy I really like the idea of positioning for a move back to maybe that breakout level. I want to call it in mid to late June. And then you see that rising 200-day moving average down there at 150. I think you've been in the camp that we could have a retracement back to that. And if we see any sort of just slowdown in demand, the stock's going back towards the lows of that range over the last, call it, couple months, and then maybe it could find its way back towards that 200-day. It appears that I lost Guy Adami, but I like the idea of legging into trades like this. In NVIDIA 180, which is where the stock stopped on Friday, could also be a level. But, again, I just think that these sorts of names really do hold the key, at this point. So we saw again how some of those names did not trade particularly well after they gave their CapEx. So Guy's going to come back in a second, but maybe, well, let's wait until we get to Butters. One of the things I thought was interesting that we didn't talk about, let's pull up Snap for a second. Not a name that we talk about too frequently, but when you think of that whole notion of bearish to bullish reversal, so the stock was trading, it looked like it was on its way back towards $7 right before its earnings. And on its earnings, we saw that Perplexity gave Snap a $400 million deal that was a combination in revenue, and it was a combination of their equity. And you say to yourself, well, that's not a bad deal, that Perplexity's valuation keeps skipping higher. And the idea was that Snap was going to integrate Perplexity's AI search engine, or they like to call it an answer engine, into their offering. I like that deal, man. And here you are, you see the stock up towards what, 850, 860. What is this stock right now? I'm looking at 880. Okay, so you had this move from like 720 to 880. I kind of like this thing. Back it out a little bit, 5-year chart. You're going to see that kind of bearish to bullish reversal. And I think if you see this thing come in a little bit, I think that added revenue could be a really interesting sort of I don't know, stopgap in the near future. And I like the idea, as Perplexity's valuation skips higher, that they have exposure to that. Another bearish to bullish reversal. Look at Rivian. Okay, so this is a company that still loses a lot of money. They have a big cash balance. They've also been taking on some debt. But look at this thing. I mean, like these sorts of charts, it doesn't take a whole heck of a lot to get these things going, especially if the money losing thing, and there's a lot of leverage on that potential on that balance sheet. So Rivian also looking interesting to me, and they actually, for the first time in a long time, I think they were able to guide higher on deliveries. So that's interesting to me. So there's a lot of those things, and like they're out there. Pull up a PayPal. This looked kind of the same thing. A lot of these kind of work from home, payment from home, this and that, whatever. Go to a 1 year. This thing looks a bit heavier to me. It had that move off of those lows going back into the spring. And if you just move this thing to the side a little bit, you're going to see, maybe this is that level, maybe 67's that level. But for some of these that start to look better.
Sorry about that. I had a power surge or something. Windy
What's
out.
going on with that? Yeah.
Yeah, but now our generator kicked
cold
in.
And windy, Guy. Cold and windy.
Apologize.
We were doing some bearish to bullish reversals. We looked at Rivian. We looked at Snap. We talked a little bit about that Snap quarter and that deal that they did with Perplexity. I do think it's interesting that a company like Perplexity, which obviously loses money, it's a private company, they're going to actually have to pay some customers to kind of take them up on their thing, which is kind of opposite of what we saw with Apple and Gemini a week and a half ago. Apple has to pay Google $1 billion, to kind of work Gemini into its operating system. But that's a rounding error when you
money well spent, as they say.
No.
We made that point.
You want to do? Should we do Butters here?
We should do Butters because it is Tuesday. We typically do it on Wednesday, but if it is Tuesday, it's John Butters. Dan, he is the senior earnings analyst at FactSet, and we are fortunate to have his work.
Yeah. And so, again, as we get towards the end of earnings season, I think taking a look back and some of the big themes make a lot of sense. Let's talk about profit margins, because this is something that oftentimes when you hear we're getting to peak margins, it usually happens to be at kind of some, intermediate term peaks that you'll see in the stock market, right? Because if the stock market is meant to reflect the earnings power, the S&P 500 within that index, and then you're looking at growth going forward, and you're also looking at how much companies are making on each dollar of revenue. So let's look at this here. The blended, this includes actuals plus the estimates, net profit margin for the S&P 500 for Q3 2025 is 13.1%. This is the highest net profit margin reported by the index going back at least 15 years, or the extent of FactSet history. The number also reflects the 7th straight quarter of increasing net profit margins for the S&P 500. So, Guy, my question to you, is this a backward-looking sort of situation, or is it something that you want to incorporate into your outlook for 2026? thinking that coming off of this very strong 7-quarter sort of, profit margin increase, but also the best absolute number in 15 years.
Yeah. That's going to be the trick, right? So obviously, I look at this and say, if we're at peak margins, it suggests that we only have one place to go, and that's obviously a bit lower. So what happens in that? Well, if margins start to deteriorate, by definition, you shouldn't be paying as much for a dollar's worth of earnings. So the multiple in the market should theoretically start to contract as well. So that's the way I look at it. Now, the flip side of that coin, the optimist will say, well, wait a second. With the advent of AI and as efficient as these companies are, you're going to see a continuation of this growth in profit margins. And we're just sort of scratching the surface, and there's going to be more room to the upside. That's the rub. I'm obviously the former, but I could understand why people would want to be the latter.
Yeah, and I guess the other way to think about this is I think the AI component from a productivity standpoint, right? So if you're getting a return on the investment, right, as far as however you're integrating AI into your business, and you're able, and this is the sad part about it, and you're able to cut headcount, that spread is going to be really positive for profit margins. But the other thing, Guy, your point is, if we're getting near peak margins, are you willing to pay 23-ish or 23 and a half times for 2026 earnings, in the S&P 500? And that's the rub. And, if you're making, decisions about, your investment portfolio right now based on, valuation, based on forward PE, it's probably not a great place to be,
No, that's sort of the way I come down on it. I understand efficiencies and I understand AI and all those things, and companies have been forced to be more efficient, and layoffs obviously, unfortunately, help profit margins as well. That's just what happens. But I think we're at an inflection point here. I mean, use that term and I'll use it as well. So we'll see if we start to if that starts to slow or go the other way, then I think the valuation by definition should come down in a meaningful way.
All right, let's look at the sector level here, because I think this is going to kind of back up some of our views about the concentration and the like, and some of the things that are driving the train. 6 sectors are reporting a year-over-year increase in net profit margins for Q3, led by the technology sector. I'm sure that's a huge surprise. 5 sectors are reporting year-over-year decreases in net profit margins for Q3, led by communication services. Now, communication services is tech. I mean, one of the biggest components of that is Meta. So, that is an interesting split screen, Guy, because if you think about these companies, you hear this again and again, right? The digital companies are asset light. That's one of the reasons why these stocks traded at these multiples that they did. But now all of a sudden, they're building out these data centers. They have huge hardware commitments. So now they go to asset heavy, which should weigh on margins.
Mm-hmm. And you look at this, and this is, I don't want to say this is the deceptive chart. It's not, but obviously some sectors have higher profit margins than others. So it's a little hard to look at, but what you have to really focus on is the gray and the blue. I think those are the two different colors. And your point is well taken. You're obviously seeing a pickup in some places. It makes sense, but the decrease, I think, is some of the things you want to be focused on. And it's communication services. That, to me, at least, is the one that's sticking out. So if that's a telltale sign going from basically 15% down to 12.5%, that's something I would watch very closely.
Yeah, and so the components of that XLC, which is the ETF that tracks communication services, you have Meta at 13%, you have Google at like 19% if you took it A and C common shares. Warner Brothers is in there at like 6%, Netflix, Electronic Arts, Walt Disney, Verizon, and a lot of these names. It's interesting. Pull up Netflix really quickly here. Netflix. Some of these names had not been trading well into their prints and did not trade well after. We know Google traded very well. We know that Meta traded poorly. So there's a little back and forth. Disney reports later this week. So, again, might this be one that actually has the potential to get back towards 1200, fill in that gap a little bit? Okay. We just wanted to kind of put some names in there because I think it's interesting on the sector level here. So John Butters, senior earnings analyst at FactSet, our friend, he was live IRL with us last week going through a lot of his data. And then we also did his podcast. We co-hosted his podcast, which was really fun. Go to factset.com/insight/subscribe to get the Earnings Insight blog every Friday morning in your email box. And again, we get a preview of it during the week. So we appreciate John Butters and his fine work over there. Guy, what do you want to take us out?
Before we get out, Wavy McFly, throw this up, Amanda, because he's right to point it out. I mean, energy stocks very quietly. Valero, I think, made an all-time high today. Marathon Petroleum is within few dollars of its prior all-time high, I think, in the spring of 2024. And we've talked about these bearish to bullish reversals in Schlumberger and Halliburton. You were talking about it before when my computer crashed, but I'll talk about it now in terms of these energy stocks. So I don't think you should temper your enthusiasm. I do think these moves are real, and I think you're going to see the way I mentioned pharma before is the same way I feel about energy at 11:46 on this November 11th.
Well, and as we get into December, the whole idea of looking for some laggards where you can put together some narratives away from AI, I think that makes sense. And we've talked a lot about the RSP, the equal weight S&P 500, and how it's basically up half of what the S&P is up, at 15.5% or so. There's going to be some opportunities in other sectors, and especially if the global economy is kind of humming along a little bit. So energy could be one of those. And then on a valuation basis, and don't actually forget that one of the biggest beneficiaries of generative AI is meant to be the healthcare sector. You know what I mean? So might we see some kind of big announcements in 2026 on that front? All right, man. Well, let's say we started the show with the trading gods giveth and they taketh away. It'll be interesting to see if we can get some follow through into the close today and what that means for next week. And, I wouldn't discount the fact that I don't know if it's a foregone conclusion, guy, whether the House of Representatives votes for the this shutdown, reopening, this plan that passed the Senate last night. But that could be a real curveball if for any reason that didn't happen. It goes back to what was discounted in the market. We had that gap yesterday, and when the market traded really well, and I don't know, maybe it goes the other way. I'm not, pessimistic.
One dog goes one way,
the other goes the other. What do you want from me, guy?
What do you want from me? Well, what I want from you is to have a great day on this Veterans Day. Think of that if you see him or her. Reach out, because I'm sure they'll be thrilled to hear from you. And we'll be back tomorrow on the Market Call.
Yeah. See you, everyone. Thanks.